Well, it's been a terrible start for 2016, what with stock markets across the world losing more than 7% on average. And as you can see, based on what the IMF said earlier today, the prognosis for 2016 and the next few years to come is not looking very good. In fact, I spoke with Chief Economist of IHS, Nariman, Behravesh, and he said the global economy is going to be stuck in low gear for the next 2 to 3 years at least. What does 2016 hold for the global economy? I have with me the Chief Economist of IHS, Nariman Behravesh. Mr. Behravesh, thank you so much for joining me. I saw in your most recent note, which is as of, I think, 24 hours old, that you put down this tepid, slow pace of growth in the global economy all the way back to 2000 and to factors starting then. And I was very curious about that. If you can elaborate and explain to us what you speak of in that trend.
Well, basically, we have had a lot of what I call supply-side constraints, including a slower growth in labor force and population.
Yes.
Not so much maybe in India, but certainly in China and in the developed world, but also a very worrisome decline in the growth of productivity.
Yes.
Pretty much across the board, including in India, but certainly the U.S. and Europe and elsewhere. And that's been going on for a long time. So this sluggish growth period is not something that's brand new. It's been exacerbated, certainly it was, by the financial crisis, no question. But this is a longer-term trend that we're seeing.
But the sluggish growth period didn't seem visible at all in the years 2003 to 2008. Or was it just that the financial markets dominated the headlines so much that we missed the underlying weakness?
I think there was a lot of truth to the fact that, indeed, the financial euphoria that we saw during the 2000s, right before, certainly from 2000, say 2007, masked some of the underlying slowing trends that we'd seen. So, yeah, it was there, but I think we perhaps didn't pay enough attention to it.
Okay, so you seem to be indicating that 2016 will see global growth come in between 2.5% to 3%, and that because of these underlying factors that you've just detailed, we might in fact stay within this range over the next several years. Is that correct?
That is correct, yes. I mean, I think the big disappointment has been that every year we think, next year growth will pick up, and it doesn't. It's stuck at sort of 2.5 by our measure. The good news is it doesn't get weaker than that, even though there's a lot of crises going on and everything. But the bad news is not getting any stronger than that either. So we just seem to be, the point I make is we're sort of stuck in low gear at this point.
Yes.
So.
Mr. Behravesh, what does that mean for the world? I mean, if we're stuck between 2.5% and 3% for the next several years, especially for emerging economies like India, where we need much higher global growth, not just domestically, but for the world to consume the products that we export as well. What does it mean? What are the risks that you see lying in wait because of this tepid growth or low gear?
I think it's a much more challenging environment for the emerging markets because the export-led growth that was possible in the 1990s and the 2000s is not as easy now because world trade is not growing very rapidly, and I think that export-led model is becoming weaker. So emerging markets will have to think of a more domestic-led growth. And some countries, India, for example, is better equipped to do that. The domestic economy is a much bigger part of the Indian economy than, say, China's or some of the other, Taiwan's. So, but the focus has to be much more on domestic growth rather than export-led growth.
Okay. We just had the China numbers come in, 6.9%. What do you make of that number? What do you expect will be the China growth rate for this year and the next year to come? And therefore, what should we be prepared for?
Well, we have a dilemma because nobody believes China's official numbers, but we have to use them. We have to use them. So on an official basis, we're saying this year, next year, Chinese growth is going to be about 6.2, 6.3%. Much weaker than even last year. China's growth has been steadily coming down, of course. Unofficially, I think it's probably more like 4 or 5%. Wow. So I think, from that perspective, I think China's growth, if you look at what's going on in their financial markets, what's going on in commodity markets, you have to believe that the actual growth rate is less than the official numbers.
So if we go down to 6.2%, you're then saying that commodity prices, in fact, are either stuck where they are right now or could head lower, including with crude, and not move up.
I think there's a very high risk that commodity prices, including oil prices, will stay low for an extended period of time. Believing, if you do, that the Chinese growth numbers are going to continue to disappoint then I think certainly commodity prices are going to stay low for a while.
For a while would mean a year or two?
A couple of
or
years
a
would
couple
be,
of years.
yeah,
Okay.
really.
So I have then a quick last question on India. The expectation, at least of the Indian delegation coming to Davos, is that this is the year maybe the world will be looking at India more closely because it hopes to deliver growth in the region of 7% or 6.5% to 7%. What do you make of India's growth prospects at this point in time?
We're fairly optimistic about India's growth prospects. India is a bright spot in the world economy. It's an island of stability in the global economy. So in that sense, I think it's right that India should be in the limelight. It's a sort of long coming and well-deserved. So from that perspective, I think, yes, indeed, a lot of people will start to look at India more closely now.
Well, thank you so much for your time. I hope you have a good Davos.
Thank you very much.
Thank you very
You
much
too.
for the interview.
You're very
And with
welcome.
that, it's back to you.